What if I what if I told you that the real secret to becoming a successful trader isn't about hitting home runs? It's not about calling tops and bottoms. It's not even about mastering complex indicators or even wild strategies. What if it is about just doing a little bit less and making a fewer mistakes? Well, because trading, like life, is a loser's game. You win not by being a genius, but by avoiding unforced errors. That's the point of today's daily primer. And the way we're going to do this is we're going to do the daily primer. And then, as a sneak peek, what I'm going to do is go over my trading strategy in detail and just set up the levels with you together. Now, the big lesson here is that the loser's game. That's what we're going to talk about. There is a concept from Simon Ramo, who studied tennis players and split them into two types. Professionals win by hitting brilliant shots. It's a winner's game. Amateurs win because their opponents self destruct. It's a loser's game. Now, if we apply this concept to trading, professional traders don't win because they're making magical calls every single day. They don't, have this magic ball and know what's going to happen next. They win because they've learned how not to lose. They cut bad trades very quickly. They don't revenge trade. They avoid the trap of FOMO entries, oversized positions, and overcomplicating things. They don't force errors, and they don't force the market to come to them. So no unforced errors in trading means no not adding size on a setup you haven't tested or doesn't have an A plus edge, not trading on tilt after a red day or a red hour, not trading, not breaking your plan when emotions spike, not touching the market on days when you're just not, present mentally and even physically, uh, trading on your phone, not chasing the market just because you're bored. These sound very simple, but they are what separate traders who stay in this game from traders who get washed out. So I'm going to give you something to apply today that could help you. Next time you're tempted to force something, answer a simple question. Am I making a high quality decision here, or am I creating an unforced error? If you just avoid the bad trades, the good ones, well, they're going to take care of themselves. This isn't about playing scared. It's about playing smart. Consistency over complexity, patience over panic, discipline over dopamine. I'm going to give you a challenge. I'm going to give you a challenge that you could apply today that could seriously improve your mental game. Before you place your next trade, write this down. No unforced errors. Zero unforced errors. Let it guide your behavior, not your emotions. You don't need to be perfect. You just need to be consistently disciplined. That's how you're going to win in the loser's game. So I'll give you a small summary, but before I do that, let me take you to my charts real quick. And what we're going to do here is go over my open positions at this very, very, very moment. So first, we're going to set up my system. The first thing we're going to do is find yesterday's battle of buyers and sellers. I've already mapped it on NASDAQ, and it's here. There's my sellers, and here are my buyers. So I have this green and red area. Then I've got my weekly areas, and then my fibs are based on my weekly areas. You guys can see that I've just taken a NASDAQ buy recently here. I have a stop of 27 points, and obviously a take profit of 125, which is a free plus risk reward ratio. I do have a DAX that's winning too, and I've already mapped these levels out. So there are my buyers, there are my sellers, and then if we pay attention to today, price action has gone out, the sellers left, they came back in, the buyers took control here, the sellers here, the sellers there, the buyers, the sellers, the buyers. The sellers are retested 3 times, and that's why I have those free positions long. 1, 2, 3, all in a profit so far, and all slowly heading to my free plus win ratios. What do I mean by free plus? I mean the minimum take profit I'm going to set is a free plus, an average of about 5 plus. Does that mean I'm going to hold to the take profit? No, I might get out earlier. Moving over to gold, I have a buy on gold at the moment. I've already mapped my buyers and sellers. The reason I've taken this position is because the day began and we're very bullishly recovering so far the losses of yesterday. Check my other video out, the one just released before this. It shows the recap of my trades yesterday. The reason I'm long here is because higher lows are forming. So the day begun, and we're just going upwards. You can see this, right? So, and as soon as we broke 261, I've taken this trade. Now, oil. I still have an oil sell from yesterday. The only thing I didn't map is my levels of buying and selling. So let's do that now. The buyers are down here, right here, and the sellers are right up here. So those are my zones of operation. So I'm going to be very, very interested in these zones. And once I'm done with the video, I'll set some alerts up. Regarding Bitcoin, the buyers are down here, right there. The sellers are right here, and we're above this. I did take a very nice profit on Bitcoin this morning. Let me show you. And that is a trade from yesterday. There it is. So I take this buy, I get out here at the weekly level, and then I put a pending order here, and I got tagged into this. So I've got to buy a stop loss of 400 points and a pretty solid take profit of 2,000 points. Moving over to Euro USD, let's now fix our buying and selling zones. There's my sellers. There's my buyers. Sellers, buyers. Now I'm going to operate within these zones and out of them too. So you can see Euro USD did reject a key weekly level. CAD JPY, pretty interesting here. I do have a buy, a little bit late to the party though, but it's okay. So there's my sellers. There's my sellers. And there's my buyers. The last buying point is here, and we just went above it. So I'm going to take another position long. Take a stop of 15 points and a take profit 3 to 1, 45 pips. GBP AUD, we're going to put our sellers, which are right there. That's where the last selling point occurred. And then my buyers are right here. So this trade is so far going downwards. I do have a selling opportunity, which I'm going to take. Put a stop of 20 points. Take profit of 60. 3 to 1. And I'm in. I guess that's it. Now let's go over a very small recap of what's up and what are we doing. I've just prepared my I've done this super fast, guys. It's morning. I'm tired. I want to rest. I want to spend some time with my son and my family. But yeah, things are going well. CAD JPY already in a nice profit there. Gold's giving me a potential short. We'll see. But anyway, we spoke about quite a bit. I did this fast. But let's give you a summary of what I spoke about in the beginning. 90% of trading success does come from avoiding unforced errors. Trading is a loser's game. You win by not self-destructing. Focus on cutting mistakes, not adding more complexity. Discipline and restraint equals long-term consistency and edge. And finally, let no unforced errors become your trading mantra. Because most of you guys, the reason you're losing in this business is because you're self-sabotaging. So it's all mental. It's not system. You could make money with many systems. But the reason you're not doing it is because you're not working on your mind. So focus on that today. Good luck.